Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and we're going to look at daily percentage moves. So we like to look at the history, the historical data of Bitcoin from a slightly different perspective than most. So if you like more of the data science perspective and looking at mathematical models rather than just trading view all the time, then please go ahead and subscribe to the channel so we'll provide a different perspective for you here. If you want to discuss these types of charts and join the community, then check out my Telegram channel. You can find a link to it in the description below, or you can see it up here in the upper right hand corner of your screen. And finally, if you want to join the premium list with premium content and weekly reports and weekly premium videos, as well as a few other things, check out my website at intothecryptoverse.com. So let's go ahead and jump in. So the reason this graph, just so you're aware, is basically showing negative 5% moves. And the reason I'm showing you this is because, today we more or less had a negative 5% move. And there's a lot of newcomers into Bitcoin right now because there's a lot of people that have been brought in by the move from 3,800 to 10,000. So, naturally when an asset is going up and up and up, it brings more eyes to the table. And also the halving, there is a decent amount of publicity regarding the halving, which I think also brought some new investors into Bitcoin. And a lot of these investors might not be so familiar with how Bitcoin moves. You see it go up and up, and then you see a negative 5% move in one day, and you think, okay, well, what is this? This clearly can't be a good thing. Now, this is not financial advice, obviously. I'm just showing you the data, and I'm the data messenger, and you can choose to interpret it however you wish. So each bar represents a single day, and in that day, so you can see we have over the course of several years, so each bar is a single day that saw a negative 5% move. So what do you notice? I mean, you notice that every year we have plenty of days that have negative 5% moves. If you go, if you look in 2010, 2011, they were especially clustered together with, negative 5% moves were just almost a weekly occurrence. In 2012, there was a noticeable gap between negative 5% moves, and then again in later 2012 and early 2013. But during this long extended bear market that we saw, 2013 was a bull market up to the peak, and then even in that bull market, we saw negative 5% moves, and in the bear market, we saw negative 5% moves on the daily time frame. The bear market being mostly the year of 2014. In 2017, we saw a lot of days with negative 5% moves, even though you have classified 2017 as a bull market. Note too that the year before 2013, there wasn't a whole lot of negative 5% moves in a single day compared to other years. In the same manner, in 2017, there was a lot of negative 5% daily moves, but the year before there weren't that many. So it's kind of interesting. It shows you that even when Bitcoin is skyrocketing in a bull market, it's still going to be accompanied by days that see negative 5% moves. You can see in 2018, 2017, 2018, we have plenty of them. And then in 2019, we had a gap again. And then in 2020, we have another gap. So if you follow this channel, you know that we talk about lengthening cycles and the idea that the next peak will likely not occur until 2023, plus or minus, say, 6 or 8 months. People ask me where the earliest I could see it happening would be. The earliest I could realistically see it happening would be in maybe the fourth quarter of 2022. And then maybe the latest I could see it happening would maybe be in like the second or third quarter of 2024. But I think the sweet spot is likely 2023, but we'll obviously see what happens. And if you follow the channel, you know that we have tons of custom indicators that will help us identify a speculative bubble. And again, if you want to join that premium list, then again, check out my website at intothecryptoverse.com. Basically, the point of this chart is to just show you how negative 5% daily moves are just par for the course. If you take it up a step further, if you look at negative 10% moves, well, we still have plenty of these. Every single year, we have days where we see Bitcoin drop by 10%. There are some years where it's less frequent. Again, it seems to be the year before a strong bull market. We don't really have as many. So you can see in say 2012, there's not as many before the 2013 bull market, and then in 2016, there's not as many before the 2017 bull market. So right now, I think what we're in right now is just simply an accumulation phase. And I also think 2019 was an accumulation phase as well. So I think 2019, 2020, and maybe even early 2021 are going to be our accumulation phase that will then launch us into 2022 and 2023, where we might see a new paradigm shift in the price of Bitcoin. If we continue stepping up the ladder, or maybe down the ladder since it's negative, these are negative 15% moves. So you can see that this also helps show you that macro level volatility is decreasing in one sense, because we're having fewer and fewer days that have negative 15% moves. You can see early on they were clustered in 2010. There was another cluster in 2013, and then maybe a couple more in 2018. But oftentimes we don't see negative 15% moves. And I should make sure you know that when I say negative 5 or negative 10 or negative 15, I mean negative 5 or worse, or negative 15 or worse. So clearly this move here in 2020 was the day where Bitcoin, it really went down by 50%, but by the close of the daily candle, it was, it wasn't 50%, it was like 30 or 35% or so. So remember that this is daily data and does not include like hourly wicks. We're just looking at market open and market close. If we take it further, you can see these are negative 20% moves. So these are fairly significant. While they don't happen that often, when they happen, people really feel the pain. And you can see the capitulation we had in 2015. Of course, this was a negative 20% move we had here. We had a strong 20% drop in a single day in 2018. And then we also had one in 2020. So it's interesting because, if you look at it from a lengthening cycle perspective, 2015 was this was our single capitulation before this market cycle. And then in this one, we had this capitulation candle here in 2018. But again, this was right after the peak. Okay, this was right after the peak. So this wasn't even at say like the end of the bear market and like the final capitulation candle, because we know Bitcoin went down to $3,100 back in the end of 2018 or so. So in this time frame. But on the daily candles, it was not negative 20% in a single day. So again, you can see how unsporadic these 20% moves are. But it does tell you that it's happened before, and almost assuredly a negative 20% move in a single day will happen again. Especially after, say, a new all-time high shift or a new paradigm shift, we'll likely see a 20% move to the downside in a single day. So here we're looking at negative 25%. So obviously few and far between. I think it's kind of interesting, or just scrolled way forward. It's kind of interesting that, look how many years. I mean, we're talking about 7 years. We had a 25% move back and again, this is daily data, not hourly. We had a 25% move back in 2013, and the next one did not occur until 2020. I think that's actually pretty remarkable that we went 7 years without a day where we saw a 25% move, and it shows you, it really puts into perspective how, in a sense, catastrophic March 13th was, when we saw a close of negative 25% a single day. It hadn't happened since 2013. So it was a significant move. And we've also talked about, primarily on the premium list, we've talked about, if you see these strong moves in a single day, then what happens normally on the next day? It usually reverses, because a 25% move in a single day is not usually sustainable to continue going down that quickly. Here's negative 30%. So you can see we mainly have 3 days during the history of Bitcoin where you saw a daily to daily close of negative 30% in 2010, in 2013, and 2020. And then finally negative 35%, same data. Here we're looking at, let's be a little bit more optimistic. Well, what about positive percent moves? So let's look at daily positive moves. So this is plus 5%. I mean, this is interesting in another sense because, I mean, in a somewhat remarkable manner. I mean, well, it's not remarkable; it's expected. I mean, when we're seeing these huge bull markets, like in 2011, 2013, like at the end of 2013, at the end of 2017, daily 5% moves to the upside are also par for the course. And during accumulation phases or bear markets, while they're not as necessarily as plentiful, you still have plenty of them. I mean, even in 2018, there were plenty of days where we saw 5% moves to the upside. Now, in later 2018, they're clearly not as prevalent because Bitcoin was mainly just going down during this time. But it's interesting because you can see how volatile the asset is, no matter whether it's in a bull market, a bear market, or an accumulation phase. Here we have 10% moves. So you can see the clusters, in 2011, at the end of 2013, at the end of 2017, and then again we'll probably have another strong cluster of them again at the end of the next bull market. Here we have 15% moves. This is interesting because they are very sporadic. You can see a couple in 2014, a couple in 2015, none in 2016. This was when Bitcoin was moving up, but it was moving up, more methodically and slower than it was later on. A couple in 2017, none in 2018, one in 2019. We'll see if we have any in 2020. But again, these are, they're sporadic, but it goes to show you how volatile Bitcoin is at all times. I mean, even 15% moves to the upside are it's just par for the course if you're holding Bitcoin for a long time. Here's 20%, so it's interesting. Bitcoin has not seen a 20% move to the upside since the end of the 2017 bull run. So throughout all of 2018 and all of 2019, and so far throughout 2020, we have not seen a 20% move to the upside. If you look here, you can see in 2015, we saw two of them, and this was preceding, the bull market from 2016 to 2017. So we still haven't even seen that yet. So we'll see. Maybe we'll see that in 2020. Maybe we'll see it in 2021. A 20% move to the upside. It seems if you just look at the clustering of the data, say 20% moves, it's clustered over here, and we're becoming a little less frequent. It seems like we're getting due for one in a sense. It seems like it's been over 2 years. We're going on 2.5 years since Bitcoin went up from candle open to candle close 20% in a single day. So be on the lookout for that. It'll help signify that maybe, I really don't know, but it could maybe help indicate that, okay, maybe we're in the beginning stages of the bull market. We're getting that huge kick. I'm sure it would retrace some after that, but maybe that'll be coming up in the next few months. We'll see. But it does feel like it could be due for one sometime this year. Here we have 25% moves daily. It's interesting because you can see how infrequent they are. I mean, we had one in 2013. The next one was in 2017. The next time we see a 25% move could be, maybe it'll be in 2023 or something at the end of the bull run or close to the end of the bull run. Here we have 30%, so this is actually quite remarkable. We haven't even had one since 2013. So even in the last bull market, there wasn't a single day where we saw a move of 30% to the upside. So it could be that with Bitcoin, we never see a 30% move in a single day again. It's been so long since it happened. And judging by the fact that it didn't happen in the last bull market, it makes me think that, well, if we're going to see diminishing returns, why would we expect a 30% move to the upside in a single day? The only way I could see it potentially happening is something like where you see a huge capitulation candle, and then maybe the very next day or a few days later, the bulls just come to the rescue, and there's just a huge move in a single day. Or maybe at the last day of the bull market of 2023 or something, maybe there's a day where we see a 30% move. But it could be we never see that again, and then 35% is the same stuff. Here is plotting them on the same chart. So red lines are -5, green lines are +5. What do you notice? basically, it seems like there's so many days where you see a 5% move in Bitcoin that once you've been holding Bitcoin long enough, you even hardly notice it. I mean, it is what it is. It's, you're going to see 5% moves to the downside. You're going to see 5% moves to the upside. This is par for the course for Bitcoin. Don't get discouraged by it. This is why I say have a plan. If you're dollar cost averaging, I do it dynamically. I know a lot of people don't like that idea. A lot of people just want to put it, say, every single month they put in the same amount. But from my perspective, by always having cash on the sidelines, well, it also helps minimize your risk to the market if there's a move to the downside. But also, if there is a move to the downside, then you have that extra capital to capitalize on it. If you don't have the money, then you don't capitalize on it. So people say, well, I'm in a sense, I'm risking that there won't be a move to the downside, and then what happens if Bitcoin goes up? What if tomorrow it starts moving up? And my answer is I have plenty of Bitcoin. If it goes up, then I'll be happy because I have that money, already invested in Bitcoin. If it goes down, then I'm also happy because I have the money sitting aside to purchase more Bitcoin. It's all about risk management. I mean, there's no free lunch at the end of the day. If you have, the money you have in Bitcoin, obviously, the more exposure you have, if it goes down, then, obviously you'll be wishing you probably had more cash on the sidelines. If it goes up, you'll be wishing you had more invested. But if you just look at it from a simple risk management perspective, you say, okay, I recognize that I could miss out on some gains in the short term, but I also recognize that I don't want to risk not having the money. And this is a perfect example. I mean, there's people asking me last week, well, why don't I just go ahead and lump sum all of my money into Bitcoin now if I don't have any? And you can do that, but I mean, here's a good example. I mean, we see negative 5% moves all the time. It's not necessarily the worst idea. This is not financial advice, but it's not necessarily the worst idea to dynamically dollar cost average, because if you can manage to hold on to extra capital, then when it does drop, and believe me, the one thing I can tell you about Bitcoin that it will do is it will drop. Now, it always matters, of course, what happens in between those drops. But if you want to take something to the bank, I mean, there's going to be days where Bitcoin drops 5 or 10%. It's the nature of the game, and you either can handle that or you can't. And if you can't, then crypto will, chew you up and spit you out. It's the simple fact. So here's 10% moves. Again, less sporadic, but I mean, even in bull markets, you can see the clustering of plus 10% moves earlier on, and then at the end of say a shorter term move, you'll see these negative 10%, and then again at the end of the bull market, a ton of those green candles, and then that's the beginning of it. It's the beginning of the end, I should say. So the beginning of the end of this bull market, and then the clustering of red candles at the end. Again, in 2017, a lot of green candles clustered at the end of the bull market, and then after it, a lot of the clustering of the red candles. So another indicator could be if in 2023 or somewhere around there, we see a huge cluster of these green candles, you might start thinking, all right, well, the last several times that we saw this, it was usually followed by a cluster of red candles, where we saw negative 10% moves, and it could happen during the middle of the bull market. Maybe it doesn't happen at the end. Maybe you see a lot of green candles, and then we see a few red, followed by some silence for a while, and then we see it happen again. And this is why, if you follow the risk metric that I made, and again, if you want to find access to that, intothecryptoverse.com, then it allows you to capitalize on it, because it's not. I mean, you can tailor it to your own approach, but the fundamental idea is that if Bitcoin's going up a lot in the short term, then the risk is going to go up significantly, and when the risk goes up, then there's a higher and higher probability that the risk is going to go down in the short term. And so you can always capitalize on it, and you can sell at a certain risk level and then buy in at a risk level you're comfortable with. And if the price continues to go up monotonically, then you're happy because you keep selling. And if it drops back down, then you're also happy because, hey, you sold some of your Bitcoin and now you can buy it in for cheaper, so that when the end does come, you can sell it and you have more Bitcoin to sell. Here's 15% moves plus and minus. Still somewhat interesting. I mean, I think you guys get the idea. Again, I just want to show a couple more things. Check out the website intothecryptoverse.com if you want a weekly newsletter, a premium video that I do every week for people that are on the premium list. And in addition to all this, you get access to a dashboard that I'm slowly building out on Google Sheets, so you can follow along live with risk metrics and a few other things like under and overvaluation of the total cryptocurrency market cap. Finally, I want to pull up TradingView. All right, so here, this is what was being celebrated today by the bears. We saw, basically, let me take a measured move here so you guys can see it. If we take a measured move, well, this is a weekly candle. Let me go to daily candles. So from the top to the bottom of the wick, we saw, negative 6 or 7%. Currently, it's maybe around negative 5%. But hey, what did we just show? Negative 5% is par for the course even in a bull market. We don't even know yet if we're in a bull market. In order for us to be in a bull market, again, we're going to have to test the 20-week moving average. And if we go back to the weekly chart, you can see, the blue line is the 20-week moving average, and currently it's close to $8,200. If you're new to the channel, why do we say the 20-week? Well, simply because during a bull market, it tends to be the support line. During a bear market, it tends to be our resistance. Okay, so if we hold the 20-week as support, which we will need to do at some point, it's not like a switch that you just flip on and off. We're likely going to need to confirm it for weeks, if not months, like we did in the last bull market. You can see a long confirmation here before another spike off of it, and then a long confirmation again, and then spike off of it. And then later on, the spikes, basically just touched the 20-week and then went back up. So the first few times, I imagine we're gonna stay close to the 20-week moving average. So we have to test it at some point. Whether we test it at 8,200 or whether we tested it at 14,000 is somewhat irrelevant. We're gonna test it at some point because the price is not always going to stay higher than the 20-week moving average. So if you have Bitcoin, or you say hold a lot of other coins as well, we've also talked about the idea that if the price goes below the 20-week, then Bitcoin, while it performs poorly, it tends to perform better than most other coins. So, if you're holding, not financial advice, but if you're holding, say, 30 different altcoins, then most of the time you'd be better off just consolidating to Bitcoin and stablecoins if you see it go below the 20-week moving average. So keep that in mind, and the 20-week is at around 81.71. Currently, we are just above the 50-week moving average. So you can see the 50-week is at around 87.85. I don't talk about the 50-week that much, but it has played, it does play a role sometimes. You can see here it was a resistance area back in the bear market. We've also seen it over here. It was a resistance point too back in the last bear market. Interestingly enough, during the last bull market, we never even came close to touching the 50-week. So I clearly wouldn't say that we're in a or a bull market yet. Because in the last bull market, we hugged the 20-week all the way up. So what do we want to see ultimately is, us to confirm the 20-week, for the 20-week to slowly get above that 50-week moving average, and then for the price to stay close to that 20-week moving average for a few months, and then maybe we'll see it start to pop above the 20-week moving average, and we'll see the risk go up in the short term, and then it'll retrace. And we'll likely repeat this for 10 different times over a few years before we see the new paradigm shift in the price of Bitcoin. Now, we know that the bull market has not started yet. We are seeing a golden cross printed today. So this is obviously one of the necessary but not sufficient conditions. Like being above the 20-week moving average is necessary but not sufficient. So we're going to follow what happens in the short term. We're going to follow it, see if over the next several months we can confirm the 20-week moving average. If we don't, it's no big deal. If we don't, maybe we go back down to the 100-week, maybe we go back down to the 200-week. And if we do, then I would say you need to be able to capitalize on that. You don't want to be the person capitulating at the very bottom, like here. And you don't want to be the person capitulating at the very bottom, even at the 200-week. I mean, we had a wick down to the 300-week. But, what's a few K among friends? I mean, this was only a few minutes that you could have taken advantage of this price. We were following it in the private group. We were following it, and at this bottom point, the risk was 0.12, and there's only been a few weeks in the history of Bitcoin where the risk is that low. So again, if you guys want access to the premium list, then check out the website intothecryptoverse.com. If you guys like the data science approach that I take and want to see more of it, then definitely subscribe to the channel. So we'll see you guys next time. And then finally, if you want to talk about this stuff with some 3,400, close to 3,400 of your closest friends, then check out the public Telegram channel in the description below. All right, guys, that'll wrap it up for this video. I hope you guys enjoyed it. See you next time. Bye.